Technically speaking, like your trading style is a money glitch.
I've been in the prop world for 23 years, and I've been around a lot of good traders. The way the traders I made my money, all the guys I've been around, is not the way that everyone's talking about on Twitter and YouTube and so on. The style of trading, I call it glitch trading. Glitch trading basically is taking advantage of inefficiencies, arbitrage, malfunctions. You've become more of a hacker than an actual financial trader. And there's a reason people don't know about it because, like I was saying earlier, we keep our mouth shut. I want traders to know that this is, in my opinion, and what I've seen by the money that's been made, is where the edge is. By my mid-20s, I was making crazy money. Dream house, dream car, traveling all over the world, every material possession I ever dreamed of. After that, 2008, I thought the good times were going to last forever. I was reckless. I was just a mess. Drinking, drugs, food. I was just gambling. I was battling. There was no edge there. I should have been trading, but I had no other options. It was just straight survival. This is when my wife was like, I've had enough. She split, lost my family. So I was 4 years old. My wife has left, didn't have any place to live, was in a foreign country, Poland, didn't have any friends, family, didn't know language. I went from 25 years old, living, dream house, having everything, millions of dollars, to living with my mother-in-law in this communist building in the middle of some Polish field. It was rock bottom.
Number one podcast in the trading space, the fastest growing, and that's thanks to every single one of you. Hey guys, before we get into this incredible episode of Words of Rizdom, I want to let you know how you can get a free trading plan. Very simple. Go in the link below. You're going to see two links. One for Telegram. There you'll get free mindset hacks, a free technical course, free updates and polls on the podcast. And then the other link is our new email newsletter. Click that link, sign up. You'll get a free trading plan PDF sent directly to you and get incredible value all week long. Let's get into this episode. Welcome everyone to the Words of Rizdom podcast. We're back once again. Absolutely incredible the growth that we've had, thanks to all of you and our incredible guests, as always. Talking of which, we are joined by none other than David Hale today, who is actually the author of Cash Rules, Reminiscence of a Day Trader, which he kindly brought to me, a hard copy, which I'm excited to read. But yeah, it's a pleasure to have you with us.
Thanks for having me. I'm excited to be here.
I know we were talking back and forth for a while. And your wealth of experience is something that I'm very much looking forward to sort of getting into and being able to get that value to everyone as well. I think with yourself, you have a very interesting story because most people who tell a particular story, maybe a lot of the time for marketing, they'll say, I was homeless and trading saved me. While yours is kind of the opposite of that, where you did really well with trading, lost it all, did well again, then was homeless, and then did well again, which is absolutely incredible. That's a roller coaster in itself. And I think for you, it might be best to start with that beginning journey. Like how did you get into trading? Why trading?
Yeah, it's definitely been a roller coaster ride. 23 years now. So it all started back. The accent wouldn't suggest it, but I'm originally from England.
Wow.
Essex, good Essex boy. So I grew up in Essex, and I from the start, I had this appetite for risk. It was crazy. I remember when I was like 10, 11 years old, you have arcades here in England. Yeah. And there's video games, and then there's slot machines on one side. So when I was a boy, I would go to these arcades and sneak across to the slot machines. I just had that appetite for risk. And I thought, wanted to make money. I was hungry for that. So it kind of started with gambling. And so it started in these arcades with the slot machines. And then I moved to Texas when I was 12 years old. And a few years after I got there, in Texas, you get your driver's license at 16. Second I got this driver's license, got my car, and I was at the horse racing track. Strange, it's a very unusual thing for a 16-year-old, especially since the gambling age in Texas is 21. So I had one of these fake IDs, and I spent my weekends at the horse racing track. I loved it. I loved the rush. I got that dopamine hit from gambling. But I thought I had an edge. I thought I could be a professional gambler. I wanted to make money. I thought I had these strategies. I thought I was smarter than the other gamblers for some reason. obviously I wasn't. So I kind of lost money doing that. And then after that, it was the gambling kind of odyssey continued, and it was in casinos and it was sports betting. When I was in college, I just took out a big student loan, and I fly out to Vegas on the
Wow.
weekends
Wow.
with my girlfriend. Again, all illegally too. Yeah, that was before I was 21. So I had this appetite for risk. And I know gambling and trading are two separate things, but there are some crossovers and similarities. And so yeah, it's been my time playing blackjack. Which, if you play blackjack, according to the book, there can be even an edge there. Similar with trading, it's a strategy. If you execute it well, you can make money. But I tried different strategies with gambling, and obviously it didn't end that well. I didn't lose too much money, but I figured out this was the hard way to do it. And around this time, this is when day trading kind of first took off. This was around 2000, and you had this the first kind of internet bubble. And I heard about these day traders. Back then, day traders, it was like these guys who were sitting on these big CRT monitors. It was a different scene, and I think some of them were still using phones back then. So I was like, wow, this sounds amazing. And I would look at I'd practice. I'd go into get the news. Back then it was a newspaper. You go to the newspaper and I check the stock quotes each day, and then I check it the next day and I was like, oh wow, I pick stocks and it's like they just go straight up. But that was everything. That was the internet bubble. So I was like, this is what I want to do. And I always, we gamble and all that. I didn't want a regular job. I didn't want to go to the office and go work 9 to 5 and have a boss and know how much money I'm making each month. And that's not what I wanted. I wanted a job where you're paid based on your performance. If I perform well, make a lot of money. If I do poorly, I don't get paid or I lose money, because I was confident. And that's what I still love that about trading. I love that, you eat what you kill. So that was kind of the path. And, after college, it was like, I want to do this day trading thing. I got a little sidetracked. My original path led me to stockbroker. I became a stockbroker. I thought that was a way. I watched Wall Street back then, and I was like, oh, this. I'll be picking stocks and looking at charts and helping all these rich clients. I got a job as a sketchy stockbroker, and they just hand me a big phone book, and they said, call these people. So I was supposed to call these old ladies and housewives and try and pitch them some piece of shit hedged mutual fund. And that's not what I want to do. That wasn't trading. That was the last thing. So fortunately, I got out of that, and there was a prop firm in Austin, Texas, where I live in. And this was your old school prop firm where they funded you. They were supposed to give you an education, and you work in an office and it's professional. And I was fortunate enough to get a job there. And from the start, I loved it. This was old school. This was when I walked in, it was just tons of 20-year-old guys in shirts and flip-flops, pounding keyboards, yelling, screaming. It was wild. And I fell in love with it from the start. And that's where I've been for the last 23 years in the prop world.
Wow. And when you say the prop word, though, it's not the sort of modern day definition, if you will, which probably isn't the right definition, like the evaluation firms that we see now, using obviously simulated funds, etc., and having these evaluations and tests that traders have to go through. You're talking more actual funds and trading on live capital in an environment with other traders as well. Let's talk about that environment as well and those differences. Like, what was the actual prop firm scene like even back then? And we'll come to today nowadays. But back then as well, and as you already sort of alluded to, what was it like trading in that sort of environment?
Well, that's the key. Yeah, you mentioned all these new prop firms, and it's when I see it, it's like it's a whole different world. For me, a prop firm is you go have a nice office, big group of traders, a lot of them successful. There's some kind of structure. There's training. You share this. You take a split of the profits. And I'd still recommend any trader getting into trading now, try the best way to do it is that way. Unfortunately, those jobs are really, really tough to come by now. There's not as many of these old school prop firms around. And the ones that are around, they have the pick of the litter. They're looking for guys with PhDs and quantitative math degrees, all that kind of stuff. But I still think that's the best environment because you're in an environment where you have other successful traders, guys sharing ideas. I love the competitive aspect of it. I'm all, that's a trait I always look for traders is, are you competitive? Because you have to be. If you don't think you're going to be one of the best, if you don't think you can make in this business, you won't. So I like the competition aspect. If the guy sitting next to me is making money, I feel like I should be making money. And you don't even have to see what they're doing and know what they're doing. It's just like, it's like a virus. Yeah, like a benevolent virus that kind of seeps over. So that's what I love about these prop firms is just having an environment where there's competition, there's sharing of ideas. And, for the new guys, you learn from these successful traders. You see the traits, you see the hard work, you see what kind of strategies you're looking at. And that's invaluable. And I still recommend, if you can't be in a old school prop firm, try and get an office at least where you're surrounded. If you're a funded trader, if you're trading your own account, it's good. It's fine you can do a lot of stuff online now, but there's nothing that beats being in that office, being around guys, the camaraderie, sharing ideas, the competition. That's a reason why my career took off, and that's a reason why these prop firms, these old school guys, the money these guys make, especially when the volatility is up, it's crazy. We're talking, 7-8 figures.
It's incredible. Absolutely incredible. I think environment is very important. And I think a lot of traders nowadays, especially because of the whole social media space, obviously a lot of people came into trading during COVID, and they're so used to isolation. They're so used to just trading by themselves in their own room, which may have its benefits as well. But I think, as you say, that competitiveness, even though you're not literally competing with the other trader, but just having that edge or that drive and that motivation to push yourself to perform better, I think is everything. And then plus to bounce ideas as well, and accountability of having other traders around. How likely, if you're in that environment, are you to then go on tilt because you don't want to be, everyone's there, everyone's going to see you. But I'm sure those moments did happen, no doubt.
Yeah, well, I want to say I've seen these firms, especially during the volatility spikes, let's say 2008, 2020, there was guys that are lucky enough to be in these firms, not good traders, but they were sitting next to really good traders and guys who would share their strategies. And they would share these strategies. And there's guys who never even had a profitable month, but they were sitting right next to the right guy and heard the right strategy and made literally millions in days or even weeks because they were fortunate enough to be in this right environment. And that's the thing with trading. It's not necessarily always skill. A lot has to do, of course, luck. You're in the right place at the right time, or you're trading the right markets. But a lot has to do, of course, environment. Mm-hmm. These guys, if they weren't in this office, they wouldn't have made anything. But they were lucky enough to be in this office, be at the right place, be at the right time, and end up making millions, sometimes tens of millions. So yeah, environment is everything.
Definitely. And in terms of the figures with these old school traditional prop firms, what is the splits like? Like the profit splits for the traders?
Well, it depends. I mean, when I first started, it was around 50%. Actually, I think I even started at 30%. Now I think, there's different models with these prop firms. Some of the prop firms, you put up some of your money, a deposit, let's say, and you get higher leverage and higher commissions. But a lot of these prop firms, you come in and they're funding you. And yes, I would say probably the standard, maybe around 50% to start off. Mm-hmm. But the top traders there, I mean, they're probably making not 100%, but pretty close to it. Yeah. Because these firms, when they have a top trader, when they have a guy making 6-7 figures, they want to keep him because there's other options for these traders. Yeah. And, that's the key. If you're a good trader and you're making really good money, the world's your oyster. You can do anything. Any firm will take you, and they're promised this and you're promised that. So it's really competitive. So yeah, once you start, yes, they're taking a big chunk of your salary. But once you become a good trader, you're in control. You have the leverage.
Definitely. Well, from your experience, obviously being in these environments, is there anything in particular that stood out to you about the winning traders, the ones who had that alpha, the ones who sort of put themselves at the top of the
the pile there, if you know.
Let's take a break for a minute there, guys, because I want to tell you about the best prop firm in the entire industry, Alpha Capital. Let's keep it nice and simple. You want to get paid out. You want to have institutional experience behind the firm. You want to have their own broker so that you can trade on the best platform that all traders love to use. And on top of which, they have their own technology as well, so you know they're here for the long term. Alpha Capital has no commissions as well as part of their trading conditions, which is absolutely incredible. And not only that, they're London's finest. Now, if you want to join them, 20% off using the code RIZ, and the link is in the description below. Now let's get back to the episode.
What I say, they're cool. They're cool. They never, and that's what I can see from the start when a trader. And what we can talk about later. I had my own prop firm, and the first thing I look for in a trader is like that first day. If you put them on demo, and if they start screaming and slamming keyboards and like, oh, I'm in a bad trade, it's like, okay, no, you're not gonna make it. If you can't handle that stress, if that that affects you so much trading on a demo account, how's this guy going to handle, trading with, tens of millions in capital? So that was one thing. And if I saw a guy like that from the start, I'd say, you're out, you're done. Let me save you your time. Let me save you my money. And, I'm doing you a favor. It might be hard for them to take, but that's the way trading is. It's really tough. So that was a big thing. They have this attitude, and they're confident. Like I said, they're confident in their ability, and you have to be in trading. And they're competitive. That's a big thing. These guys, most of the good traders I know, you take them away from trading, and they're just the most competitive bastards. You play a board game with them, you're playing pool at the bar or something. They want to win. They want to win. And like I said, that's an atmosphere in a lot of these prop firms. And I know, and I got sucked in it too. You make 10,000 more, but the guy next to you makes $10,001, and you're like, oh shit, I left money on the table. And that's the way it is. And maybe it's not a good thing, you should be satisfied having a good day. It's a terrible job where you're pissed when you lose money, and then even pissed when you make money because someone else makes more money. But you gotta have some of that competitive.
I think it pushes you. It pushes you to try and perform more.
It does.
I think obviously the negative side is, of course, that you could get emotional trying to compare, and therefore then go off plan, for example. But would you say that they just channel that competitiveness to perform better and sort of be more disciplined towards their whatever strategy or plan they're using?
Well, that's a great point. That's the thing. You can go, oh well, this guy made more than me. But if he has a different strategy, like it's a whole different world. Your goal as a trader. And it all boils down to this. You have to have a strategy with edge, and you have to execute that strategy. And that's all you can ask for yourself. Did I execute my strategy with edge efficiently or effectively? If you did that, you should be happy with yourself. And that's usually what you get from these guys. But you never see, and the best traders I've known, if they make $1 million or lose $1 million, same face. Mm-hmm. You have no idea. They make $1 million, they're not high-fiving, maybe a little emotion, but if they lose $1 million, they're not slamming desks, they're not causing trouble, because they know that's part of the game. And you've got to be able to take it. If you stay in this game, losing is part of the game, and it hurts. But if you don't have that in you to accept those losers, you're not going to survive.
Definitely. And it was interesting you mentioned there as well. I saw a podcast actually with another trader. His name's Lance from the States. His last name, I think I know it in my head, but I'll butcher the last name. I think it's Bernstein.
Yeah,
maybe.
Lance, I know. Yeah. He worked with a similar prop firm that related to the prop that I started at.
Is it like, would you say it's a small world, in those sort of circles?
It is there's a fairly small world, but it's a small world, but there's not a whole bunch of communication between these firms because they keep their mouth shut. Mm-hmm. There's not many of these traders I've been around.
Competitiveness.
It is a competitiveness, but they kind of know what guys are making, and this guy's making this. Yeah. But as far as strategies and what they're doing, they're keeping their mouth shut.
Definitely, no, I can imagine. And one thing that he mentioned though, which I found very interesting, was that for traders to be profitable, like to really make money from the markets, he said that you can't just keep a dynamic a fixed risk. A lot of people, especially on sort of my side, the retail side, and sort of the evaluation firm side, is people say only risk 1%. And what he was basically saying is that you can do that, but you're not really going to make any money. Like the good traders, he was saying, is that they know when to size up. They make the majority of their big plays in their trading career in maybe a handful of trades because they knew to size up on those trades and take that gamble, if you will, take that risk, be willing to take that risk. What are your thoughts on that?
No, that's so true. I mean, and throughout my career, I'd say I've been 23 years, 95% of my profits have probably come in 3 years.
Wow.
That's the great financial crisis back in 2008 and the COVID 2020. And this is when we had volatility. And for most traders, the volatility that's king. That's where we make our money. So yeah, most of the time it's about survival. It's about waiting for these opportunities to come along. And when they do come along, yes, you have to hit it, and you have to hit it hard, because you don't know when the next opportunity come along. 2008 was amazing trading, and guys did really well. But I thought, okay, after 2008, okay, in another few years, we'll get another huge spike in volatility. But really, it was from 2008 to 2022 before we had a really big spike in volatility. Yeah, there was some events. You had the Euro crisis and a couple other small things, but it was a long wait. And the good traders, they stay in the game. It's survival. And like I said earlier, there's all these traders who really weren't good traders, who were in the right place at the right time. But I've also seen let's say right before COVID, there were some good traders, really good traders, but the market was tough and they were struggling. They didn't necessarily have the exact amount of discipline to stay in the game, and they were out right before COVID hit. And then COVID hit, and bang. So if they'd just been able to survive and been disciplined enough, they would have been millionaires, with weeks or months. So a lot of it is survival and adjusting different market conditions. And that's what the good traders do. You have to adjust. You have to survive, or maybe switch. A lot of good traders I know, okay, equities are really dead. Let me look at crypto. Let me look at futures. Let me find where the action is. And that's another good trade I see in the top traders. They have a mindset. Being a trader is not, a good trader is a good trader. He's not a good equities trader. He's not a good crypto trader. He knows the markets. He knows how to see edge. He knows how to be disciplined. He knows how to hit that trade, whatever market it is. So that's some of the traits I see in these top traders.
Definitely. So being able to be diverse and be able to adapt to where the opportunities are and identify them and then attack them when necessary.
Yeah, well, that's what happened in COVID. Before COVID, I was sitting there, I was trading a few hours a day, and it was just survival. It was tough, and it was, and we can talk more about it. I mean, I was on my last legs for a lot of time. It was just, my account was drying up, but then bang, COVID hit, and it went from me trading, few trades a day, just sitting there, basically strapped into my workstation for like 12 hours a day. And I think in a few days, I traded more shares than I did in the prior 6 or 7 months.
Wow.
And then, everything, you have to put everything on the side track, and you just sit there and you trade. And it was intense for a couple of weeks there in 2020. Basically didn't leave my workstation. It was trading for 10 hours a day, then some Twitter to see what's going on, and then trying to sleep, although the markets were just, all you saw was like, charts and level 2 market maker blocks. So it was rough, but that's how it works. When the going's good, you have to take advantage of it. You put your foot on the gas, but you also need it when it quiets down. You got to know when to step back.
Yeah.
And that's the problem. These traders, a lot of them, they're fortunate to be there, and they kill it, and they make all this money, and then the market changes, the conditions changes, and they don't know when to ease off and when to change, their discipline to be less aggressive or look for different strategies. That's the key.
Definitely. No, I couldn't agree more, and it's really great to hear, because I think it's a fantasy that some traders have, or people out there who are trying to trade anyway, that eventually they'll get to a point where they just win. They just win all the time. They can read the market all the time and read it like a book, so they know it's going to go up on this day and down on this day or this hour or whatever it may be. And they think that eventually, with enough time and experience, they can just always win. Maybe obviously have some losses, but just as in always profitable every month on month, quarter on quarter. One thing to touch on before we move on to maybe a bit more into your journey is the losses. The people who lost quite heavily, let's say at a prop firm. Was there any traits that they showed, or how did they handle that being in that environment? Like, how would they handle these heavy losses or losing streaks?
The guys who lost and didn't make it, one of the most important thing is they were stubborn, I think. If you are fortunate enough to be in a prop firm or an office around a successful trader, pick their brains, do what they're doing. And that was my problem when I first started. I was like, I'll do it my way. I'm gambling. And then as soon as I figured out, okay, what are the successful traders doing? Let me do that. There's no pride in having your own strategies and doing it your own way. You don't get paid for that. You're judged on your P&L. So the best way to do it is still borrow strategies from the guys who are, making money. And a lot of these traders come in and they're stubborn. I want to do it my way. I want to, trade fancy technical patterns No, what are the guys doing who are making money, and copy them? It's not quite that easy. You can't, this he also has skills, but there's strategies out there that even, on the web, you can find good strategies. Don't be stubborn. And that was a big thing with these guys, stubbornness. And of course, lack of discipline. Guys would come in and they wouldn't, the big, for new traders, I always said the number one thing, and this sounds redundant, people always say it, cut your losers. And that's another trade. If I see a guy who come in and he doesn't cut his losers, get your education as cheap as possible. When you first start trading, you have no idea what you're doing. You're clueless. So there's no point in losing a bunch of money. Get your education as cheap as possible. Cut those losers. And not only you won't lose money, but you'll get in that habit of being disciplined. If you can't sit there and you can't cut your losers, you're not going to make it as a trader. So that's a big thing I saw with a lot of traders don't make it. They're not disciplined. They don't cut their losers. They're letting the losers run. They're getting emotional, and they're stubborn. They're not following what the winning traders are doing, their methods. That's the easy way to do it.
Definitely. Would you say they're not being self-aware enough to realize that, okay, what I'm doing is definitely not working? And when you say discipline, one thing that sort of has been a common theme from what I've seen from the guests I've had on is that not only are they disciplined within their trading, they're disciplined in their sort of everyday life as well. Is that any sort of correlation you've seen, or doesn't really matter?
I don't know. It is. I've been kind of the exception to that. I've survived in this game for 23 years. Mm-hmm. And my lifestyle and away from trading, I'm not the most disciplined guy. Mm-hmm. I've gotten in trouble for, partying too much, drinking too much, all that kind of stuff. And that's not good. But I'm not the typical example. There's not many traders. I don't know many guys have been in the business as long as I have. Mm-hmm. But the guys who have are disciplined in their trading and outside. Their lives are pretty structured. It's been a wild ride. We can talk more about it. But Definitely. Yes. It is. And that's a big thing with me. When you're disciplined in your life, where you have structure, trading's one thing, but that's a big thing outside of trading. Are you healthy? Are you eating healthy? Are you exercising? Do you have a good routine? That's just as important as the actual trading. And that takes discipline. And I've noticed with my P&L, when I sleep better, I trade better. When I eat better, I trade better. When I exercise, I trade better. When I drink less, I trade better. There's so much going on. And yeah, if you're not disciplined outside of trading, yeah, you're not going to make it as a trader. Like I said, I've had my issues with the discipline outside of trading, and I paid for it. Mm-hmm. And that's kind of in the book. What I want to teach traders is it's precautionary tale. Don't kind of do what I do. You have to be disciplined. You have to have not only a trading plan, but a plan to handle trading too. And that's what the good traders do. They're usually at the gym. They're eating well. They're sleeping well. They've got a calm family life. That's a reason why they're good traders, and that's the reason why they're making a ton of money.
No, it's interesting what you said there, though, in terms of like being the exception, because I think obviously there's no like one size fits all. There's no one rule that fits all. And that's one of the, again, kind of what we touched on earlier is like the benefits and negatives of trading. Like the benefit is that there isn't like a one way that you have to be or have to do or have to take action on. It's quite free. Like you have options. Like there's different ways of doing things. But then that's one of the negatives is that sometimes we just allow ourselves to have an excuse of, well, I'm just going to do this because it's possible, right? But as you said, it's like been a roller coaster of a journey. And one thing that you did mention in the book is your style of trading. And you've essentially, there's a reel that I've made before called the money glitch. Like trading is the ultimate money glitch. But technically speaking, like your trading style is a money glitch.
Yeah, I use it. I like this term glitches, and I took this term and used it in my book Glitches, and that was a big thing I wanted to write in this book because like I said, I've been in the prop world for 23 years, and I've been around a lot of good traders. My brother's been a professional trader for 20 years. I've traded in 2 or 3 really good offices, and the way the traders I made my money, and all the guys I've been around, is not the way that everyone's talking about on Twitter and YouTube and so on. It's more the style of trading. I call it glitch trading, and glitch trading basically is taking advantage of inefficiencies, arbitrage, malfunctions. Basically, when the market goes breaks, you're looking at the structure of the market and you're looking to kind of take advantage of that. It's more, and it's more scavenging. You're become more of a hacker than an actual financial trader. We're not looking too much. Yeah, of course, I have charts on my layout, but it's more a lot of level 2. It's a lot of order books. You're looking for bad prints. You're looking for markets that are out of whack. You're looking to trade on one market and sell on the other market. You're looking for auction strategies. It's a very different style of trading that most people hear. And there's a reason people don't know about it because, like I was saying earlier, we keep our mouth shut. In the book, I'm trying to promote this method and style. Of course, I can't hand out these magical strategies because they are tough to come by. But I want traders to know that this is really where in my opinion, and what I've seen by the money that's been made, is where the edge is. Like I said, in 2008 and 2020, the money at these big prop firms, it wasn't made from shorting bank stocks or speculating on which way the market was going. It was by playing these little glitches. To get into 2008, these offices, these prop firms and the traders around, they would come in for a couple of minutes at the close of the U.S. equity and play a really specific auction strategy, which was basically 2 clicks. And it had nothing to do, there's no fundamental, no technical analysis. So that's what I'm trying to promote. It's a mythology. It's a different way to look at trading. There's no speculation involved. It's mechanical. A lot of traders get in and they want to do it their way. Like I said, they want to be stubborn. I want to buy Tesla because I think it's going up. Oh, I think oil is going to be strong because of this and that. Or the market's going to be weak because the FOMC is doing that. For me, that's not our edge. That's not our edge as traders. That's what hedge funds, that's what these big banks do. And they struggle at it. You look at their returns, they have a tough time beating, the benchmarks. So I think a trader, and it's backed up by what I've seen in the results, needs to have a different approach. They need to just try and pick up the scraps that these big players are left behind. And that's what I kind of call glitch hunting. And that's a methodology I still use. And that's a methodology nearly all the traders I've used, whether they're equity traders, whether they're futures traders, crypto traders. Right now, that's where the glitch traders are kind of going to. It's crypto, because crypto is a very kind of more inefficient market. There's fragmented markets. There's different exchanges. There's different games you can play. And as a glitch hunter, that's the kind of stuff we're looking for. We're looking for, stuff's broke. And as I mentioned earlier, these glitch strategies really come alive during volatility. When volatility comes, it really shakes the market. The market kind of breaks. There's too much liquidity or not enough liquidity, and the algos get their plugs pulled. So that's when glitch hunters really take over, and that's where we made money, like 2020, 2008, when you had these big spikes in volatility.
Incredible. Absolutely incredible. And there's 2 really big points that you made there, especially in terms of the glitch trading, just to break it down for people at home, for example. It's like you're looking for discrepancies. There's probably different versions of it, as you mentioned, but like discrepancies in, let's say, pricing, for example. Yeah. And maybe you'll be better off giving an example that people can understand. But, one thing that you mentioned there is about the algos being unplugged. So in terms of algorithms, I literally released an episode when this was recorded yesterday where the trader, someone came on the podcast and they were saying, like, there's a debate in the trading space in terms of, like, there's an overlord algorithm that is delivering price, right, that the central banks are using. And then, so someone helped code this, and then they're teaching this strategy that can help you to read this algorithm, for example. That's one part of the argument. Another argument is that people say there is no algo. There are algorithms that get used, like high frequency trading and things like that, but there's no overlord algorithm, one algorithm that rules the market and helps with the efficiency of the market. And the debate doesn't matter in my eyes. It's just an interesting debate to see. But as you mentioned, that the algos get unplugged when the volatility is high. So what do you mean by that?
Let's take a break for a minute there, guys, because I want to tell you about the best trading tool on the market, TradeZella. The reason why TradeZella is the #1 trading tool that every trader needs is because you can do backtesting, automated journaling, trade replay, in-depth analytics, and so much more. And the greatest part about TradeZella is that it's all automated. All you have to do is connect your MT4 and MT5. It will pull all your data onto the dashboard. You can add playbooks. You can just add notes. You can add images from your trades, and you can get the insights that is necessary for you to progress as a trader. Now, TradeZella is for absolutely everyone. Whether you're a crypto trader, whether you're a Forex trader, whether you trade prop firms, it is for absolutely everyone. And that is why thousands of traders have signed up using my link here through the podcast. Make sure you use the code RIZ10 for 10% off your monthly subscription, or WOR for 20% off your yearly subscription. The link is in the description below. And let's get back to the episode.
Well, when I first started, there was a big kind of beginning of electronic trading. And back then it was when I first started this prop firm, I remember going in and they were like, oh, we got a guy making 20,000 out there in a month. And of course I was like, wow. But looking back, the markets were so inefficient back then. You didn't have the algos, closing the prices and chasing this. It was, if you were a good scalper or a good glitch hunter, it was easy. It was slim pickings. There were so many simple strategies. I mean, my first strategy was basic, and a strategy I still use, was just looking for stocks that lagged the S&P. Mm-hmm. So I'd find stocks. The first stock I traded was 3M. It's a big S&P Dow component, and I saw that when the market went up, the stock would generally follow the market, but it lagged it. So market go up, 3M would be sitting here. I quickly buy it and then cover when it came up. Simple strategies, and that's those are the type of strategies, and it was easy back then. Now, of course, automated trading's really taken over, and those type of strategies are tough. Although, when the volatility picks up, they do come alive. But it has overall, I would say, it's definitely made my trading and the glitch hunters trading tougher. But you have to accept that. And you can find ways to take advantage of these automated programs sometimes, or these algorithms. But it's there to stay. I can sit there and complain and go, oh, these algos, automated trading's ruin my strategies. But that's life. And as a trader, I can automate my strategies. That's a great thing. I'm stubborn, I'm old school. I still sit there and I'm punching the keys. I'm an old school discretionary trader. But the smart way to do it is find a strategy with edge and automate it. And then you can kind of take the execution out of your hands. So if you can't beat them, join them, I say. But overall, it has made trading tougher. But there are times when the volatility really picks up. And I think it really makes things even more wilder, because these markets they're basically structured for automated trading and algorithms. When they go away, it's kind of like the Wild West, and there's all kinds of arbitrage and wildness out there. And if you're a good skilled glitch hunter, that's when you can really take advantage of it.
It's very interesting. So like the algorithms are really there to keep price efficient and to reduce these discrepancies between like brokerages and firms and prices. Mm-hmm. So therefore, when volatility kicks up, and that's normally why we don't see, like a lot of people try and promote EAs, algo trading, trading bots that they sell as a service, and they show like a certain amount of profitability, but it's quite rare to see one being promoted in the online space anyway that is long term, and that's because of the changes in conditions and volatility. So then what you're saying is actually they will turn them off or switch them off during the volatile moments to maybe avoid any sort of huge losses or anything impacting the market in an aggressive way. But then that leads the door to having these discrepancies for that period of time.
Yeah, I mean, overall, like I said, I'm old school. Mm-hmm. Every day for me, I'm down on a computer and it's a battle. It's hand-to-hand combat. Mm-hmm. It's on the keys. And unfortunately, I'm like a kind of a dinosaur these days. Most people is going to the automated trading, and most of the time I say that is the efficient way to do it. But you're right. There are times when I think it's even you have an advantage of like being on the keyboard, being on the mouse, where you can kind of sit there and react to what's going on. But you also have to know what to do. I've got experience in that, so I know what I'm doing. A lot of new traders, when volatility hits like that, if you don't know what you're doing, you don't have a strategy, it just probably means you're going to lose more money. Yeah. But yeah, the automated trading is here to stay. It's good. It's bad.
Would you say you see less of it in the crypto side? Is that probably why there's?
I think that's why I think that's why a lot of these traders are going to crypto. Mm-hmm. The bots are, automated trading definitely has got into crypto, but there's so many different markets and there's a lot more risk there, and especially the bigger players. I think the big banks and so on and the big hedge funds are a little more skeptical. Yeah, to kind of step in that direction. I mean, looking back at 5, 6, 7 years ago, the crypto markets were just wild. There wasn't hardly any algos, and it was you could buy Bitcoin on one exchange for 5,000 and then flip it to another exchange for 6,000 or 7,000, and that's glitch hunting. That's trading. That's edge right there. That's things in my dreams. Of course, it's not quite as easy. The automated trading, the algos have kind of figured these games out, so they've kind of taken a lot of that edge away. But there's a lot of games out there, and like I said, at crypto, these are where kind of the smart glitch traders are going. But a lot of the thing I see with a lot of traders, and my advice to a lot of new traders is go to crypto. But it's not necessarily the trading you think. It's not, I'm just going to buy Bitcoin or I'm going to be hold. I'm going to, it's getting down and dirty. It's going for airdrops. It's arbitrage in a perp and a spot. It's not necessarily what most guys think of trading. Most people get into trading there. I'm going to be picking stocks, or I'm going to be, guessing which way the S&P's going, or oil's going, or, the pound's going. No, this is a different type of trading. This is scavenging. This is out there trying to get those scraps that, the automated trading might have left behind. Maybe not all traders want to do it that way, but that's where the edge is. And I tell new traders, if you want to be a trader, it's so tough. The success rate is so low. You don't have the luxury of kind of choosing what and where you want to trade. Go to where the edge is. So crypto's a great place right now mainly because there's not all the algos and there's more exchanges and the market's fragmented and you've got all these kind of wild
volatilities. Even without, say, huge volatility, like the volatility is already naturally increased in crypto.
Yeah. Right now it's crazy. I mean, 4 or 5 months ago, people weren't, all these crypto traders, it's so tough. Mm-hmm. Now it's really picked up. The volatility's up. You've had these ETFs. It's kind of attracting the traders. But it's not always that way. Sometimes it's where equities has got all the volatility. So if you're a trader, you go to equities.
So it's like what you said earlier about like finding where the opportunities are. And then the reason why this glitch trading is so appealing to you and you think that's where the edge is because nothing's ever guaranteed in trading, but it creates that edge in your favor, as you say, because you can see the discrepancy. Yeah. So before you execute that trade, you can see, the reality of what the outcome should be based on the discrepancy. Is that the right thing?
Yeah, it's mechanical. It's free money also. I mean, in the book, I use a story, a glitch hunter. I use and trading, like I keep saying, trading is not equity trading. It's not option trading. It's buying low and selling high. Shouldn't be really speculating. I think people get that mixed up. They think trading is speculating. Well, I think this stock's going to go up. No, that's not our game. Look for deals. One of the best trades I ever saw is I was selling some computer monitors online on basically eBay marketplace. And for some reason, I mispriced them. I don't know why. I was just it was a crazy mistake. And I was living in Poland. I did it in Poland on their local kind of eBay marketplace. So I put these monitors on sale for a ridiculously low price. And within seconds, I was getting phone calls. I was like, well, this is good. Some guy showed up at my door in about 10 minutes with cash and was like, I'll take them all. I was like, okay, great. I was like, well, maybe I did something wrong here. This is this guy was a little too happy. He was a little too fast. So a little while later, I looked back on this marketplace and I saw these same computer monitors on sale for about a 50% higher price. I was like, oh wow, this guy. I felt like, I was like,
He
oh
glitched
man,
you.
he glitched me. But I was like, hey, way to go. I wanted to just, slap him and pat him on his back for a hell of a trade. That's trading. You could be, you could be trading on online marketplaces. That's trading, but you got to look at it that way.
Mm-hmm.
Not speculate. Not I'm going to buy these computer monitors because I think they're going to go up, or I'm going to buy the stock because I think it'll go up. No, I can buy this stock or this crypto coin or something at this price because the market is higher at this. I can flip it. That's the way I think a trader should think.
Yeah, because as you said, it creates that edge. It allows that confidence. Now, tell us the reality of like finding these sort of opportunities though. How difficult is that, especially if you're looking across different markets, and no doubt, and maybe even talk on the fact of like how often these sort of opportunities come along. Is it something that requires obviously a lot of patience because it's not going to happen every day, maybe every week? So what does the reality of using that as your edge look like?
You have to be patient. And that's the thing. A lot of people, they write to me or they're like basically asking me to hand them a glitch strategy. Like, first of all, like if I had it, I wouldn't give it to you because glitches, the more people know about it, it kind of takes the edge away. And I don't, usually I don't have them. You sit there, it is waiting. But again, the way I try and find it, you need the tools. You need to order in stocks. We have level 2 where you can read the book, or ladders in futures and so on. You need the tools. You need alerts. It's, again, finding them from other people or looking at the right markets. Crypto is a great place to look. You have to look at the right times. I trade equities, but once a market opens, I quit. I trade pre-market because I find it's a lot glitchy there. There's not as much automated trading. There's not as much algos. It's good glitch hunting time. So that you got to look at certain markets. You got to look at certain times. A great story is I was going through arguably the toughest time in my trading career. Back against the wall, didn't have anything. And we can talk more about how bad it was. But I was desperate. And I was looking for a glitch strategy. And there was nothing going on. It was dead. Equity markets were dead. But I knew crypto, there's some action in crypto. And this was 5-6 years ago. So I just typed in crypto arbitrage strategy on YouTube, searched, went through so much crap. There's so much garbage, filtering out all the crap out there. And I finally found this guy sitting in his garage with about 20 views, and he was talking about this. It was a crypto ICO strategy. It's very complicated, but I talk about it in the book, and I even shared the YouTube video. And he was handing out an amazing arbitrage strategy. And I saw the strategy, I back tested it, and it's like, wow, there's so much edge there. And for the next few months, I did this strategy and made some really good money and got my whole trading back on track. So I'm not suggesting every trader, you're going to get just go on YouTube and everything is going to be good. But if you dig hard enough, there are some really great resources out there, whether it's YouTube or whether it's Twitter. But again, most people, they're not going to hand you this glitch. They won't hand you the glitch. They'll tell you how to look for the glitch or point you in the right direction. Look at these markets, they're glitchy. Or, there's arbitrage here, there's arbitrage there. You have to know where to look. You have to have the tools. You have to have the time. And yes, you have to wait. The good markets, obviously the glitches are in these volatile markets, and, we don't get volatile markets all the time.
Definitely. And talking on your journey then, like you mentioned, you obviously had a roller coaster of a journey. You were quite successful in your 20s, making a lot of money from trading, going then to losing it about 10 years later, and then starting your own prop firm, and then basically losing everything and having to go work a normal job and sort of on the borderline of being homeless, to then bringing it back again, which I think was the last part of that journey there 5 years ago, right? What happened in those moments? If we just briefly go through those moments and sort of the key reasons as to why we were at the lows and at the highs, and the sort of the lessons and I think the biggest lesson really, bringing to today to end off would be like the persistence, because most people, when they have, obviously as traders, we may have built a certain tolerance to hardship and failure, but there's levels, there's levels of that. So like losing a few trades is one thing, but losing everything is another. And then losing everything maybe in your trading account is one thing, but losing absolutely everything is another.
Yeah.
So, what was that journey like? So what were the key lessons to the rises, the key lessons to the falls, but what allowed you to get through all of that?
Well, yeah, it's been a crazy journey, and like I said, this is not normal. The book is a precautionary tale. I made a lot of mistakes in my career. Fortunately, I'm still standing. But yeah, it started really good. Within my first year of prop trading, at first I didn't know what I was doing. I was gambling, so I lost $40,000 within a few months. I was on the verge of getting fired. Then all of a sudden, got in these glitches, got into scalping, cut my losses, able to turn around, and within the first year, had a 6-figure month. And then by my mid-20s, I was making crazy money. By mid-20s, dream house, dream car, traveling all over the world, every material possession I ever dreamed of. It was good. It was good times. And it got better. 2008 was crazy trading. I made more money than I could have ever dreamed of. After that, 2008, I thought the good times were going to last forever. I was reckless. With my money. I moved to London, was living like a king, spending money, traveling all over the world. And I got away. I left this office. I was trading in Texas, and I left this office to go live in London, just for change of scenery. I got remarried. There was a couple of reasons, and London's a great place to live. And before my trading was off. I didn't adjust. 2008 was good trading, but I didn't adjust to the market. I put my foot down. I was still going for it. I was like, I want those big days. I didn't adjust my strategies. The market, the volatility had died. There was times where you trade conservatively, look for other strategies, but I didn't. And another lesson is the money I made, I was blowing it. I didn't save it. I'm terrible at investing. I thought it would last forever. I had no backup plan. I don't know how to do anything. I know how to play this glorified video game. I'm a scalper. Every day is a battle. I don't have any skills. So there was no other option. It was trading. And so after 2008, it was probably 4 or 5 years, I just spent all the money I made and wasn't making money trading. I wasn't losing much, but there was no money coming in. And I was living in London, and I had a wife and children, and I was starting. When you're not making money, it's as stressful as hell, especially when you have family. And all of a sudden, I got in a situation where the money had just dried. I had to go, and I was trying to keep this from my wife because I didn't want to scare her. And I was confident. I always have, as a trader, you got to be confident. I was confident that the markets would come back. We'd have that huge volatility spike. I'd find this amazing glitch strategy. But it never came. And this was about 10 years ago. There was no option. The money was going out, no money coming in. I had to go, my wife, sorry, we're basically broke. I don't have any money in my trading account. We got to get out of London. We're living in the most expensive place. So we packed our bags, put our child in the car, and drove to Poland. She was from Poland. Poland's cheap. It was a good place. So I went from 25 years old, living, dream house, having everything, millions of dollars, to living with my mother-in-law in this communist building in the middle of some Polish field, and it was a shock. So that's where I was, and I didn't think there was any way out. Story goes, all of a sudden there was this amazing event came up. It was a Facebook IPO. Everyone knows Facebook. At this time, there was one glitch strategy that worked, and this was, you would buy an IPO, initial public offering, when it opened on the initial day of the auction, and then it would have a pump. So you quickly buy it and then quickly sell. And this was I call it a glitch strategy. It was working well. Mm-hmm. And the more hype with this IPO, the better. And Facebook, I mean, I'm sure you remember, it's still enough. This Facebook IPO, it was like
the biggest thing of the century.
It was the biggest trading event. And I just moved to Poland, and this came. And I was like, okay, this is going to save me. So I spent basically our last savings. I flew to Texas to trade this in this office with my brother and all these other traders. Like this, I got to be in the right office. Got to have good internet. I got to be around this crew. And we were all, this was it. We were all going all in. I went all in. I was like, okay, don't have much in my trading account. This is it. So bang, all in. And we thought, so the Facebook opened, and my stomach fell, and I was so nervous. This is everything depended on this. This is my family, and there was a glitch in the Facebook IPO. Something happened, so we didn't get our executions back from the exchange. So there was a couple hours we didn't know if we're in this. We actually got the trade or the trade had been canceled. And the thing is, Facebook opened, and it did spike up really fast, but then it started trading under the opening price. So I knew, and most of the traders, if our trade was filled, then bang, I'm done. Career over. And after a couple hours, bang, it hit. And I saw that Facebook trade hit my blotter. Bang, career over. I had to call my wife. It's like, lost everything. That's it. Went back to Poland, tail between my legs. It was bad. Yeah, foreign country, didn't know anyone, didn't have any, other family, any hopes of getting a job. Fortunately, it was kind of miraculous. I got this emergency credit card loan through an American bank. I guess I didn't know kind of what situation I was in. So I took this loan, and we could say stupidly, what I did, I said, I'm going to start a prop firm. This sounds crazy, and I'm not suggesting anyone kind of follow this path. So I started my own prop firm, old school prop firm, where I'd bring in traders, fund them, teach them, run the firm, do the marketing. I was doing it all myself. Of course, it was undercapitalized. I had my brother and a couple other partners came in, but it was a crazy idea. But I loved this old school prop firm, and I figured we're going to have another volatility spike. I'll get a couple good traders, split the profits, and it's going to be an amazing business. But at the same time, I didn't have any money. I was struggling. And so I had to make money every single month as a trader to support my family and to keep the company going. So it was wild. It was really the most stressful time of my life. So I was teaching these guys, training, recruiting, and trying to do my own trading. And the market was really tough. The volatility is gone. The glitches weren't there. So there was a few years where, every month was just a battle, and it was stress. I wasn't sleeping. And after a few years, the company, of course, with all this going on, kind of winded down. I had some really good traders, and it was a good time. And a lot of these traders have gone on to better things. So it's not, I wouldn't say all regrets, but it was a stupid business idea. And the business, of course, collapsed. And I ended up in my apartment, trading away, battling the markets each month. And by this time, I was just a mess. I was drinking, drugs, food, everything. And my trading, like I said, you need a strategy with edge and execute. I didn't have either. I was just gambling. I was battling. There was no edge there. I should have been trading, but I had no other options. It was just straight survival. And so right as my 40th birthday approached, I basically blew out my account. I had, I think, a couple thousand left. This is when my wife was like, I've had enough. She split, lost my family. So I was 40 years old. My wife has left, didn't have any place to live, was in a foreign country, Poland, didn't have any friends, family, didn't know language. I had no job. I don't know how to do anything. I can't even do a spreadsheet. So couldn't just go get a job at some corporation or whatever. I had no skills. So it was rock bottom. Fortunately, my dad came up to Poland. I live with my dad. I mean, it's tough to talk about this now. This is embarrassing stuff. 40 years old with a family, living with my dad. And what I had to do is I took a job as an English teacher. This is the only job I could get. So I was teaching English for $10 an hour, trying to build this tiny little account that I had. So I'd gone, like I said, from $1 million trader, good life, living in Texas on, dream house, just living in Poland, basically sleeping on my dad's couch, working a job for $10 an hour. It was rock bottom. But sometimes as a trader, you need that. Unfortunately, sometimes you need that slap across the face. You have to kind of hit rock bottom before you wake up. And sometimes it's even like an individual trade. You'll have really good trades, and then you'll hit that really bad trade, and it hurts. It really stings, but it shakes you, and it gets you back on track. So this somehow got me back on track. I was like, okay, you have to you have to do this. So I got my discipline back. I went slowly. I got these strategies. I started trading these pre-market strategies. I had structure. I started doing discipline. I stopped gambling. I had a more healthy lifestyle. I stopped, cut the bad things out. Became a better dad, and it was a traumatic time in my life. But again, looking back, it was I'm really proud of getting myself out of it. It was survival instincts, and sadly, I had nowhere else to turn. And that's a big thing I want to tell traders: make sure you have a backup plan. I wish I had a job to go in. I wish I had a ton of money sitting there. I wouldn't have gotten in that state, but I had to move on. And fortunately, I slowly got my trading back in check. I got my head straight. This teaching job was nice. I got to talk to people. It was so much different than trading. Yeah, just going and teaching English. So got things turned around, and then for a couple of years, slow profits, grind out profits, just surviving. And in Poland, fortunately, it's cheaper, so you don't need to make a ton of surviving. And if you have a couple of glitch strategies and you're a good scalper, I strongly believe you should make money every month. It might not be hundreds of thousands, but it could, we're talking thousands. And that was my goal. And that still is my goal, survival. Make enough in the slow months and wait for those big months. And then that's when you attack it. And fortunately, I would say unfortunately for me and a lot of traders, COVID came along. And we had this huge volatility spike, amazing trading. And like I said earlier, I strapped in. I bang, 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 for a couple months. It was really intense. But 2020, 2021 for us traders were amazing. There were so many opportunities, glitch hunting, GameStop short squeezes. There was all kinds of madness out there. So that's the story. And then since then, of course, the markets have quiet. For equity traders, have kind of gone back. The volatility has come back. So it's back to surviving, finding where these glitches are, and then waiting for those big opportunities. And maybe looking at different markets. I'm looking at crypto because there's more opportunity there. So that's the story. And like I said, it's a precautionary story. I don't want people to necessarily follow my lead. I want them to learn from the mistakes I made. Have discipline, have a backup plan. Don't have a healthy lifestyle. Mm-hmm. Don't get in that habit of drinking and drugs and bad diet and not exercise. It's terrible for your trading. It's terrible for your mindset in general.
100%. What an incredible journey it's been, and no doubt, it was definitely hard for you to obviously experience. But as you said, like you've learned so much from it. Would you say one little thing that stood out to me there was that obviously you had that really big win, then there's probably like the peak of the career at the time in 2008. The volatility kicked in. You've already been trading consistently. And then after that, it was like the volatility obviously came down. And it sounded like you just got attached to the idea of the volatility coming back. So you kept being prepared or kept trying to look and seek for it and trade that. Do you feel like that's what's dangerous to traders? Is that no matter where you were at in your journey, because by that point you'd been trading at least 8 to 10 years roughly. So it's a nice chunk of time, and you had profitability, made good money, lived like the dream life, as you say. And do you think that's the dangerous part of trading, though? Is that there's no matter how long you've been doing it, if your mind can get stuck on an idea and it stays there, and even though it's the wrong idea, and we get stubborn, as you say, that's why trading's so dangerous. Because even if you're 30 years in and you've made tens of millions, you can lose all of it if that happens to you.
Yeah, you have to evolve, and that is a big lesson. If you're counting on volatility, first of all, it's not a very nice predicament where you're just because volatility, it's bad things cause volatility. It's financial crashes. It's COVID. It's 9/11. It's bad stuff. Yeah. So it's not the greatest job where you just wait in. And that was the thing. What volatility? It must have been last year. One of the events that caused the volatility was the war in Ukraine. Russia, yeah. So I'm living in Poland, and in Poland we had all these Ukrainian refugees, and we're right on the border. And I saw it firsthand. I could see these people coming across the border, just shocked. We'd go to the train station, handing out food and stuff, and it was crazy. I've never seen anything like it. But as a trader, I mean, sadly, you're kind of like, this is my opportunity. Mm-hmm. This is where I make money. And I saw that. I started trading a couple of weeks before 9/11. And I was a newbie. I didn't know what I was doing. I was clueless. And I remember going to the office, and you were looking up at the TV, and you see all these horrific things happen. And I'm, me and the new guys just sitting by the TV, like, jaw drop. But the veteran traders were sitting there, trading away, pounding. They were just going crazy. This was the type of event they were looking for. So yeah, that's a bad predicament. And yes, if you are generally, like I say, waiting for volatility, those waits can be extremely, extremely long. Like we're saying, 2008 to 2020, that's 12 years. And it was a rough 12 years for me. It was a rough 12 years for my brother. That's also our fault because there was opportunities other areas. Crypto had a time when it went crazy. A good trader, the top traders, they find these other markets. They find these other strategies.
So was that one of the issues that you were just focused on one market during that period?
Yeah, you get stubborn, and maybe if you have bad times, you lose your confidence, and you're a little scared to do that. It's a big jump to trade different markets, and I'm not suggesting the traders out there just jump around different markets. If you're going to trade a different market, it's a learning curve. You have to study that market. You have to learn the market, and you have to make sure you have strategies with edge before you jump in. You can't just say, oh, crypto's going crazy, I'm just going to go buy a bunch of crypto coins. No, you've got to talk to people. You got to have an edge. You got to have a plan. You've got to have a way to trade it. You got to have capital. That's a huge thing. So, and it can be scary. And for me, that's the big barrier. It takes time and it takes money. A lot of times when you learn a new strategy or trade new markets, you have losses that come along with that. The key is keeping those losses as small as possible. But that was probably a big thing that kind of scared me from doing that. But yes, that's something I regret. There's tons of lessons in my journey, but that's one of them. Adapt to the markets, be flexible. If your trading style is not working, find another trading style. There's always guys out there making money, as you know. There's whether it's crypto, whether it's futures, whether it's forex, whether it's guys on eBay selling computer monitors. Trader goes to where that edge is. That's the way. But you have to be cautious when you're doing that. Also,
definitely. And one thing, what was like the height of your career in terms of capital wise? How much were you like trading with, like size wise?
Well, fortunately, these prop firms that I'm talking about, this different model, we get amazing leverage. So you can, tens of millions at the most was probably the most I've been trading. But as a scalper, it's not as capital intensive as you would think. A lot of times it's just, like I said, a lot of times it's more video gaming. So most of the time I'm not trading huge size. When the volatility picks up, that's when you really want to go for it. You need the leverage. But most of the time, I'm trading with 1 million, 2 million share account, just scalping back and forth, looking for a glitch. And I'm fortunate enough in a lot of these prop firms, you can get really good leverage intraday. As you know, it's probably a lot tougher to get leverage overnight. There's a lot more risk there. But that's not the style of trading I want to do. I'm a scalper. That's why I do it. I want to sleep at night. Scalpers, we sleep like babies. We don't have overnight positions, and that's the way I stick it. And also, it's good for leverage. That's a benefit of being one of these prop firms.
Definitely. So, like when going from that position where you're trading, size of or capital of like tens of millions to then all the way down to losing it all, how do you deal with that, or how did you handle that psychologically? Because naturally your head will be going, I want to be at that level again. I want to trade that size again. But you can't. The options are to flip and try and essentially very easy try and gamble. So was there a battle there? And if so, like how did you combat that and sort of bring that in to, okay, I need to trade with edge. I need to build up very slowly. As you said, you were working the job. And again, that's maybe another thing you can touch on in terms of psychology wise, when you go from living the high life to the best life to then having to work a job probably for one of the first times at the age of, I think you were 40 at the time. Yeah. How did you handle that as well?
Well, it was a big shock, to go from working, and at that teaching job, I had bosses and I had to do sheets and all this bureaucracy. It was crazy, but it was good. It was refreshing talking to people. I was at a corporation teaching English, so it was grown up people. So it was kind of therapeutic for me. And it was an extremely tough time. But during those tough times, you've got to realize, you can't just jump back in. There's a reason I was losing money because I wasn't trading well. So you have to get your head straight and you have to slowly get back in. And that's a key. Even if you have you're trading okay and you have a bad streak, you have a slump, the key to that is first probably stepping away, getting your head straight, and then slowly jump back in. You don't, when you're not trading well, don't trade size. Step off the brakes, take a break, step away. And you have to be aware of that too. You have to realize, okay, I'm not trading well. And a lot of traders, they go, oh, well, it's the market or it's my software. No, it's good. And the big thing you have to realize, is it my strategy or is it my execution? Because I'll say it again, the whole key to trading, I have a strategy with edge and I execute it well. If you don't have a strategy with the edge, you shouldn't be trading. That's gambling. So if you're losing money and you go, well, I don't think my strategy has edge. I'm executing my strategy well, but I'm just keep losing money, then your strategy doesn't have edge. If you have a strategy edge and you're just not executing well, then that's better because you can just get your head straight and start executing well. But if you're not executing well, you have to take steps to improve your execution. That could be taking a break, having a better routine, better environment, steps like that. So again, awareness. What is it? Is it the strategy or is it my execution or is it a combination of both? If you have a good strategy, you can't just give up on the strategy the first day you lose money. But if you keep losing money executing the strategy well, then there's a problem with the strategy and you have to look for a new strategy. If you have a strategy as well and you're just executing poorly, that's something you can fix, and that's more psychological.
Definitely. And talking of psychological, was there any moments, in your journey where you worked with a psychologist or like a performance coach for trading?
No, there should have been. I've just been on discipline. I do it all myself. I'm rogue. I'm out there. I'm traveling the world. Ideally, my career would have been so much better if I just stayed at the first prop firm, where I worked in this nice office where they do have support. A lot of these prop firms have their own performance coaches and psychologists. So that would have probably been the best idea. But no, I'm all over the place. But I do recommend that for traders. Use every tool you can get, whether it's software, whether it's data feeds, whether it's performance coaches. I'd say courses or chat rooms and stuff. There are good courses. There is good chat rooms out there. You have to be careful, of course, because there's a lot of sharks out there. But there's so many tools that can help you. And yes, talking to people, and that's a great thing about working in an office and being around traders. That's kind of my psychological. Those are my psychologists. Is talking to other traders. My brother's a trader, so we talk, and that's the way I kind of get my head straight, because that's the only I can talk to my girlfriend, I can talk to my wife, I can talk to my other friends who aren't traders, but they don't understand. They do not understand what it's like to have one of those big losing days where you lose, 5-6 figures because of your own lack of discipline, because you were trading when you shouldn't, or you hit the button when you shouldn't. It's a painful thing, and nobody understands that. You go to work, you sit there all day, it's stressful, and you come out, $10,000 poor because you screwed up. Not many people understand that. You can't, people go to these regular jobs, have no idea what it's like. There's only certain people understand that, and that's usually traders, or maybe a psychologist, or maybe a performance coach. So yeah, it's important to talk to people like that. Don't isolate yourself. Get it out. Talk to traders. Be in an office. That's the key.
Definitely. And in terms of like taking a loss like that, what is one of the biggest losses you've taken on a single trade?
This Facebook one I talked about was a big one, and that was probably the most painful. And the painful thing about this Facebook trade is it was out of my control, and it happens. A lot of traders have those and that was one trade where I had a good strategy. I thought I executed it as well as I could, but this time you have a malfunction in the actual market, and that is painful. When I had, it's just that was cruel. That's cruel. And it happens. You know, it could be not only a malfunction in the market. We've heard so many brokers, bang, overnight they're gone with their, with their funds. So that's the risk of trading. And that's the cool thing about trading. You can be the best trader. You can have the best strategy. You can make all this money. And then all of a sudden your broker takes it all. So that's something you have to think about too. How safe is my broker? How safe is my software? Do I have a good internet feed? Your internet goes down and it costs you thousands. It's a cruel job. So yeah, that's handling those type of trades. I think are the worst, where it's out of your hands. Although I say worse, as we said earlier, those trades where you messed up. It was your lack of discipline. You traded when you shouldn't. Yeah. You should have been sitting on your hands. You did a strategy that you're not supposed to do. Those trades, a lot of times, are the most painful.
Definitely. And in terms of risk management, with this like glitch system, again, because it's not guaranteed, but because you're looking for the discrepancies and you can see the discrepancies. So before you even entered, you can get a really good feel of how this is going to play out. Are you able to then size more on those opportunities, especially as well, because we've already highlighted the patience necessary to find these opportunities can sometimes be a long period of time. So therefore, your frequency isn't high, even though you're scalping, because a lot of the time, especially in our world, scalpers normally frequency is very high, like they're trading 2-3 times a day maybe. But for you, that won't necessarily be the case because you have to wait for the opportunity. So maybe when the opportunities are there, yes, it is 2-3 times a day, maybe more. But when they're not, it could be not taking trades for months. So when the opportunities do come for your strategy, would you be sizing a lot more?
You would be sizing, you'd be aggressive. And you have to assume that this is going to go away. This glitch is going to go away. Other people are going to find it. The bots the algos are going to be on it.
Patched up.
You have to hit it quick. I mean, a good example was there was a trade, this was maybe 6-7 years ago, and in the equities, I trade these volatility ETFs. And I saw a strange pattern. Every day when the market was volatile, every day after the market closed, at exactly 3:15, this volatility ETF quickly spiked up. And it was just for like a few seconds it did this. And there was no rhyme or reason to it. It was a glitch. And I later found out why, but the why doesn't matter. I saw it and it did it a couple of days in a row. I went 3 days in a row. I was like, okay, I need to do that. So the execution is pretty simple. 3:15 you buy, or right before 3:15 you buy, and then you quickly sell when it spikes up. And it was an amazing strategy. And I hit it hard for about 3 weeks. And then after 3 weeks, it just kind of disappeared. On the third, in 3 weeks, a couple of times it started going down. So I lost money. So you quickly have to kind of put your foot on the brakes. You can't just hit, and then you have to move on to the next thing. But yeah, the key is when the going's good, you have to be aggressive. You have to take advantage of it because this glitch will probably go away, and they almost always do.
Would you say it's the same though, even with glitch strategy or even just a usual technical strategy? It's the same principle really, because no edge is always available in the market.
Yeah.
You might have an edge that does perform well in the market, but it's never always there. And there's always going to be winning streaks where it's really there, really there for a few days or a few weeks, whatever it may be. And in those moments is where the majority of traders, in terms of high returns, are going to get their high returns. Because again, very similar to I think it was Soros who did the pound bet, right? And he's famous and known for that bet because he went all in on crashing that pound.
And it's confidence. Yeah, like you're saying, you have a good week and your strategy's working well. And then you get more confident, and then you add more size, and your P&L gets better, and then the P&L gets better, and your confidence gets better, and then your confidence gets better, and then you trade better. It's an amazing cycle, but it also going to happen on the other side, and that's the cruel cycle where you're trading poorly, and then you lose your confidence, and because your confidence is down, you trade more poorly, and then you trade. Your confidence gets worse, and you trade more. It's a terrible cycle, and you can get sucked into that cycle, and that's what basically happens to most traders. So the key is having that confidence. And when your confidence is up, yes, go with size, take advantage of it. But also overconfidence can be very dangerous. You get overconfidence, you get too much swagger, and you go for it. And then you can have that good streak. And then in one day, bang, it's all gone. So, and those are some of the most painful trades where you've had a good month or you've had a good 2 months or even a good year. And then in one trade, you waste away all that work. And that's what's crazy about trading. And I've had that. It's like, you think about it, you're like, that one bad trade, that one click of the mouse or, press of the keyboard just cost me 6 or 7 months of just busting my ass, working hard, trading well. I was disciplined. And then just one lapse of discipline, poof, it's all gone. It's cruel, and it's why you have to always be on your game. One little lapse of judgment, one little lapse of discipline, and bang, everything's disappeared. Not only could be 6 or 7 months profit, it could be your whole account. That's what the crazy thing about trading. You're always one press of the mouse or one press of the key away from ending everything. And it's, I think maybe it gives you a little rush, but it's also, it's a crazy thing to think about.
Have you ever thought about quitting in your journey?
There's been times, of course. I always, sometimes I love trading. I'm passionate about it. I love it's nice to be able to go, well, tomorrow markets go crazy, I can make $1 million. You can't do that if you've got a regular job. But I also look at sometimes my friends with these regular jobs, like, oh, it's so nice. You get this salary each month, and you go to the office, and you have a coffee, and you have this nice office party, and you have this environment, and you don't have this tremendous stress. Just trading, it takes a toll on you. It's been a rough life, and I want to warn people before they get into it. It's, yes, you can make a lot of money, and it can provide an amazing lifestyle. I've had great times. I've traveled the world. I've had every material thing I've had. I've had a blast, and I still love the fact that I have freedom. I don't answer to anyone. If I want to come see you today, I'll come do it. If I want to go travel somewhere, I do it. Well, of course, I lost a little bit with a family, but I still have that independence. But there's something to be said about the stability of having a regular job where you have that paycheck. And unfortunately, I've never really had that escape route. There's been times when trading was bad and I was dead broke and I was living with my dad, I wish I could just jump in some nice, well-paying job. But
it's interesting you say that, though, because I've had messages so many times over the years of people like, I'm going to quit university or college because I want to go all in on trading, which is great. Like, in terms of the confidence, right?
Yeah.
That's good. But I always ask them, like, how profitable are you? I'm not profitable. I just want the time. Don't want distractions of college and uni and studying. I always say to them, like, the same principle, what you're getting at there is like, well, just keep going, because at the end of the day, you're still quite flexible when you're in those positions at university or college. So you still got time. And until you're really seeing results, you shouldn't really make a decision like that, because you can have that backup. You're already there anyway.
Yeah.
Don't get me wrong, if it was just before they went there, maybe, because then you can go get a job, build experience whilst you do it.
Yeah.
But to say I'm going to cut doing all that just so I can every day look at the charts when you haven't got results, I think it's a very dangerous mentality.
It is dangerous, and we see a lot of that. If this same person said, I got offered a job at a really nice prop firm, where they're trading everything, yes, go for it. But to say, I'm going to go try and do a prop fund challenge or something like that, I would say, be careful. First, develop a plan, develop the strategy. And that's what scares me about this new world of prop firms. It's great that there's capital out there for traders if they have a winning plan and winning strategies, because it wasn't always that way. There's capital available. But I think most of these traders are looking at it, they're looking at the wrong way. They're like, okay, I want to get funded, and then I'm going to come up with kind of a strategy. It's like a lottery. I'll win the lottery, then I'll have all this money, and then I'll figure out. No, if you don't have a strategy with edge, don't attempt to. Leverage does you no good. Capital is no good. You're just going to lose money. So I tell these people, again, first, develop a plan, develop a strategy. If you have a strategy with edge and you feel like all you need is capital, that's when you get into trading seriously or full time. And even if you do that, make sure you have a backup plan. Sure you have skills. You have to be confident that you're going to make it. If you go into trading like, I don't know, it's tough. No, you have to be. When you get into trading, you have to be willing to break down a wall. That's what I look. When I recruit traders, I want swagger. I want the guy who's like, no, I'm going to be an amazing trader. But you also have to be realistic. The success rate's about 5%. You've got to have a backup plan. You've got to have whether that's, ton of cash to sit on or skills, you have a job you can fall back on. That would be my advice. And build your plan, build your strategies. Don't look at trading as this lottery ticket. I'm going to get funded and I'm going to go all in. Build this. You got time. You got time, and there's resources out there. So be very careful. It is a good lifestyle. There is ways to get rich. If you're a good trader with good strategy, yes, you should make a lot of money, but there's very few people who can do that. And don't throw away all this stuff. When you're younger, when you're in college, yes, you have less to lose. If you're 40 years old and you're going, I'm quitting my job and I've got a family and I got a mortgage, do not do it. Do not risk all that. But yeah, if you're younger, I guess you have less to use. But if you can do that, make sure you get education. Make sure you have guidance. Make sure you know what you're doing. Would be my
definitely. Just don't be too hasty. I'd say definitely.
No, but it's you know how it is now. People see all this guy on Instagram and this person on YouTube. They're making millions, and it seems so easy and it's so enticing. I don't blame people for wanting to do that.
I was going to ask you that in terms of, like, obviously you've been around for so long in terms of the industry, and yet so much has changed over the years, especially the rise of social media. The funny thing is, the rise of social media, you're trying to trade it, the stock side of it.
Yeah.
But what's it been like to observe the space and the industry as a whole and seeing all this growth and all this positives, yes, but then like you say, like there's a lot of people marketing and saying like, come get rich, I got these supercars, etc. Maybe painting a false image of trading. Like, what are your thoughts of observing the space?
My thoughts are, like I said, the traders I've been around, and I've been around some really amazing traders. Thousands of traders and a bunch of really good ones. Not one of them is active on social media as far as trading. That says something, right? They're keeping their mouth shut. They're making a lot of money. I'm not saying there's not good content out there. There's not good education out there. I mean, these podcasts, and there's lots of stuff. I found this amazing strategy on YouTube. On Twitter, there's some really good accounts, and there's some people doing some really good education. But be careful. Like, if you believe everything you see, you're probably not going to make it as a trader. And that's why I wrote this book. I wanted to present the other side, where I'm flat on my back. I'm 40 years old, homeless. Yes, it ends happy, but you don't see that side of things. People only promote the Lamborghinis, the fancy houses, all that, because they're trying to sell something, obviously. They're not going to say, oh, look, this is me dead broke. Come be a trader and buy my service or whatever. So that's the side you see. And it has. Right now, it's crazy. I can't get on Twitter. I can't get on Instagram without seeing these huge P&L shots of some guy in a car. Be careful out there, I say to people, and realize don't always believe what you see. There are guys out there helping, and I would say they're selling. The good guys and the helpful resources. They're selling methods and ways to look at the market and strategies. If someone's trying to hand you trades, saying I'm going to make you $1 million, that's a signal. No, I've found some amazing guys on there, and I watch their YouTube videos. I love the way they think, but they're not telling me do this, buy this. They're showing me the way to think and the way I should look at the market. Maybe go look at crypto trades here or do that. They'll leave it. The work's on me. I need to find the trades. On the flip side, I would say, and we mentioned about this earlier, if you're trading a prop firm, you're trading around other traders. Yes, that's the way you get these strategies. So be careful about what you find online. The best way to do it is have a close-knit group and share ideas. And that's probably the best way to get your education.
Definitely. I definitely agree to that, because I'm in a small group of like-minded people trading as well, all independently, but we're in this group. And even that alone has been very helpful to just learn different techniques, learn different mindsets in terms of from high-risk traders to low-risk traders, high capital and funded traders to lower capital funded traders, and the differences in mindsets and the differences in approach. And even that very small detail, let alone obviously the power of being around other traders, is obviously very, very high. One question I was going to ask you in terms of the prop firms, obviously nowadays, as you said already earlier, that is a bit more difficult. You're looking at having a PhDs or degrees in certain fields to be able to get your foot in the door. But I know you mentioned about putting capital up or track records. What does that look like? What sort of track record is favorable in the eyes of prop firms in terms of like the amount of time or maybe return they want to see, or capital wise? How does that work for people if they want to put capital up to get more leverage?
Well, yeah, there's a couple way to approach it. These actual prop firms that don't ask for capital contributions where it's you're trading the firm's money. Like we're saying, it's tough to get these jobs, especially if you're fresh, no background. You better have PhD. You better have some quant. That's what they're looking for now. Markets have changed. There's no old school guys banging on keys. It's people are looking for math. They're looking for quants. If you have that, you might be able to get a job. If not, yeah, a lot of these firms do give you, and there's plenty of prop firms where you can put up capital, and that's kind of what I do. You put up capital, and then they give you leverage on top of that. And in the equity space, there's some really good deals out there. The firm I trade through, I get really, really good leverage, really cheap commissions, and I find that's the best way to trade. But I wouldn't suggest anyone kind of get in that unless you had, let's say, $10,000. And I know that's a lot of money for a lot of people, but you shouldn't really be getting in trading if you don't have any money. And unfortunately, that's kind of what these prop fund challenges a lot of times prey on. People shouldn't be in the business. They don't have the money. They don't have the backup plan. It's kind of this desperation thing. It's almost good to have these barriers of entry. Barriers of entry should be capital is one. You need to have the time. If you're not committed, if you don't have the time, if you don't have the passion, if you don't have the backup plan, and there's physical traits, but there's traits that I think every trader should have. You should be competitive. You should be confident. Math, of course, helps. It's great to have a programming background now. If you're risk adverse, don't be a trader. If you're very emotional, don't be a trader. If you don't like the thoughts of having your salary based on your performance, if you think losing money is going to kill you inside, then don't be a trader. It takes a certain person, and then you need to have, capital helps. Experience, you have to have access to right education. There's a lot of there should be a checklist before anyone gets in trading, then they cross that off. Have the right education, have the right connections, be willing to give it years. I was fortunate. I became successful in 1 year, but now it's you got to give it at least a couple years. 2 years, that's for most people, that's forever. That's an eternity. But it takes a long time to watch the markets, to feel the markets, to learn the markets. So if you're not willing to do that, don't get into trading. Even though you might see the picture of the guy on Instagram, in the Lamborghini, but you're not going to make that if you don't have that.
Would you say that the 1 to 2 years, like you being able to do it in a year, would you say the main benefit of you, or the main driver, should I say, of you being able to do that though, and the difference between maybe others not being able to do that, especially today, is because you were in an environment where you were trading every day? So you were actually around other traders, but you were trading every day in that environment versus people doing it nowadays. They're working their job and then they're learning maybe half an hour at the end of the day, an hour at the end of the day. So of course, time-wise, they're going to need a prolonged period because it's spread across time, while you were in the field every single day, 5 days a week, 6 days, I don't know how many days, but when the market's open, you're there until the market's closed every single day for that entire year.
Yeah, screen time is huge. Every new trader needs screen time. You need to watch the market. You need to watch the charts. I'm a big tape reader guy. I'd say watch the level, the order books, watch the level 2. It just takes time for your mind to kind of get it. And if you're doing it part-time, of course, that takes longer. Yes, when I started, I was in an office, and that was my job. I was sitting there all day. Probably the most important thing is I had other traders making money, and I would see them go, this guy's making money. If he's doing it, I can do it. Most traders don't have that.
Yes.
And if you don't have that, it can seem impossible. That's a huge thing to have that around you, have that support. And another big thing, I was able to basically steal or borrow strategies. If I wasn't in that environment, yes, I wouldn't have made money in a year. And I would also say that it was easier back then. Like I said, the markets were less efficient. There was glitches. Yeah, I wish I could go back in a time machine now. Really kill it good, because we should have been making a ton of money. And I look at the traders now, the last couple of years, the good traders I know are making tens of millions. And it's tough. If those same traders performing as they are now were back in those markets, wow, the numbers would have just been out of this world.
Definitely. And you mentioned earlier in regards to like the hedge funds and these the prop firms in terms of returns. They struggle. What would you say in terms of an eye of an investor or an eye of someone looking at a return sheet? What is a good return classed as? Because as you say, like these people who are saying the high P&L statements, they're always promoting huge returns, hundreds of percents, thousands of percents. But what is an actual more professional approach in terms of looking at returns?
I've never really done it that way. I mean, I would look at my returns. My broker, we talked about my prop firm.
Mm-hmm.
So let's say I put 20,000 down and I have a couple million in buying power. I'm an experienced trader, so that's not necessarily the norm. So let's say my investment is 20,000. In 2020, 2021, my returns, if you do it off 20,000, we're talking thousands of percent.
Mm-hmm.
Which is crazy. Yeah, if you had 20,000 and you're making good six figures, that's an amazing return. So most of the traders I know, we don't. It's all about how much, just your straight P&L. How many we talk how many G's you make. I made 5K, I made 10K. We always talk like that. But as far as those numbers, good traders, when the volatility picks up, you're tens of millions is what I've seen traders make. And if you have the right strategies in your right environment, even if you're not a good trader, you can make millions. But you have to be in the right environment, and you have to have the right strategies, and it has to be the right time too.
Mm-hmm.
So those are all big ifs. But yeah, there's big numbers out there. It's crazy, and that's the thing. It keeps getting bigger because the guys get confident. We play more size and we get more aggressive. So yeah, it's wild.
Mm-hmm.
And these are, like I said, these guys aren't on Instagram. They aren't on Twitter. They're not posting screenshots of their P&L. These guys, it's ridiculous. It is ridiculous. But I admire it. These are good traders. They're good traders, and they've stayed in the game, and they wait for that trade, and bang, and they hit it. And when they do hit it, it's really good money.
Definitely. And I will leave with this point in terms of for traders out there, more the retail space, obviously, of viewership. And they're probably a lot of them in the boom and bust cycle, right? They're just not quite winning. They probably had some losses, maybe had some wins, but they're just not getting that consistency. From your experience, what advice could you give them to help them sort of overcome that and sort of get onto that track of profitability or consistency?
Well, make sure you have that strategy with edge. I think that's a huge thing. I think traders kind of look at trading that way. They look at more of a gambling. I'm playing the market. I'm battling. You got to have a strategy with edge. If you don't have that, don't trade. Go on demo. Develop that strategy. So that's what I tell when I talk to traders or coach them. Number one goal: find a strategy with edge, and then you build a plan around that. The way to find that strategy wedge, a lot of time, surround yourself with other traders. Search for it. You got to dig. You got to watch. That's the key. And go to the markets where the glitches and the edges. If you're, complaining, equities dead. There's no volatility. I can't trade it. I'm telling you right now, as we're taping this, there's a lot of opportunity in crypto, but you have to be careful and you have to get an education. That's where the edge is. So you got to get down and dirty, scavenge. Look at trading. Like I keep saying with these glitches, don't look at yourself as a speculator and I want to do it my way and I want to predict where NVIDIA and oil's going. No, get down and dirty. Look for those scraps. Change your whole mindset. Be a scavenger. Be a hacker. Look for what's broken. Look for inefficiencies. Look for malfunctions. Look for arbitrage. That would be my advice. And get the education. Surround yourself with good traders.
Definitely. David, it was an absolute pleasure. Very, very insightful indeed. And I'm sure the audience at home will feel the exact same way. Make sure you let us know in the comments below. Make sure you check out David's book as well, Cash Rules, Reminiscence of a Day Trader. We've already heard, obviously, elements of the story, but I'm sure there's a lot more detail in the book itself. And I think it's very important for these sort of stories to be told, because as we've already highlighted, the majority of stories we hear on social media is all the glitz, the glamour, the happiness, and the fame, if you will. But this is the reality of what can happen, and reality for many traders. A lot of people would never have come back, and yet David did. So it's been an absolute pleasure.
It was great. I appreciate you having me. It's always good to talk. And like I said, I hope that some listeners get that. It's an up and down world. Trading, it's not all glamour. It's not all glitz. But I still love it. It's an amazing profession, and I don't want to scare everyone out. I just want to warn people of
Show the reality.
the dangers.
That's
Yeah.
it. No, 100%. And the links for David will be in the description below, so make sure you check those out. And until next time, take care.